So we've had some clients call with some concerns about the market, usually the ones that are watching too much television. But ultimately, I'd like to go through the markets today and show you how and why they're sneakily very good. So my name is Brian Cannon, and welcome to Markets in 5. We're going to jump into a couple of charts today to kind of talk about how the market is sneaky good right now. So you have to kind of look under the hood sometimes to realize what's going on. But essentially, this is a S&P 500 chart going back a couple of years. So you can see that the market has respected this nice up channel trend, and so that's good. RSI has for the most part been positive. And MACD down here is also been above the zero line for the most part. So these little pullbacks have been buying opportunities on the way up. And so if the market, not if, but at some point when the market comes down, this 200-day moving average is going to be very important. So the market puts a lot of emphasis on 200-day moving averages. Anytime anything is above its 200-day moving average, that's good. Anytime anything drops below its 200-day moving average, it usually spells trouble and you need to be on high alert. So, when it comes down and breaks down, there could certainly be situations where you need to be on high alert. Unless it comes and reverses pretty quickly, you need to, potentially take some precautionary methods. But at the end of the day, the market has been trending up. All of the moving averages are positive. RSI looks really good, and MACD as well. So right now, everything looks really good. Now, when we zoom in on that same chart, there's a few things I want to point out. You can see that that RSI has been, for the most part, very positive in this up run. And MACD for the most part has stayed positive as well. But what's interesting here is all of the moving averages are all heading up, and that's a very, very good thing. But anytime you've got the 20-day dropping below the 50-day, that can spell some short-term trouble. But what's interesting is when that 20-day pops back above the 50-day moving average, usually the market tends to take off. So on this most recent run over the last year, here's an example of the 20-day popping back above the 50, and look what the market did. Okay, same thing here. 20-day popped above the 50, and the market took off. And we just most recently experienced the 20-day popping above the 50. So if history proves itself to repeat, then we would anticipate that this market could potentially run back up to the top end of this channel. When we look at the NASDAQ, several Markets in 5 videos ago, I discussed the wind up of the NASDAQ. So anytime you have lower highs and higher lows, essentially it creates a wedge. And when that wedge breaks, it's either going to break to the upside or to the downside. So obviously it broke to the upside. And again, supported by all the moving averages. So NASDAQ looks really good. S&P looks really good right now. All right, in this final chart, we want to take a look at the small cap. So you can see this is a longer term chart, but you can see that the small cap struggled for quite a long time. They found some support here and bounced off the support line several times, and then basically in 24 of last year, the small caps took off to the upside. So that's good. But how did they do relative to the large caps? Not so good. So what does that tell you? That tells you that the large caps are still carrying the day. So you would still make money in small caps, but you can see that the large caps are where is what's carrying the market. And so in that is the Magnificent Seven. So the top 7 stocks in the S&P 500 are make up the majority of or a large percentage of the returns of the S&P 500 because it's a cap weighted index. And so that means essentially until this trend reverses, until the small caps break out and start to outperform the large caps, you're better off in the large names right now. So you want to watch certainly the top 7 stocks, the top 10 stocks, and just make sure that they're continuing to run and that they're keeping their trends on the upside. As long as that's the case, you want to stay a little bit more weighted toward the large caps and not overweight small caps at this point. So as you can see, while the market's going to give us these returns, we got to take them. We got to stay in the market, follow the trends. So. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.